Hello, everyone. I would like to welcome you to our family business and tax considerations talk. My guest for today is my colleague Midya Omar. Midya is our tax advisor. She's been advising family businesses for a number of years and high net worth individuals, specifically in relation to tax aspects of their wealth and asset protection. Midya, very good to have you here with us.
Thank you.
Over the past months, I think the UAE has been crazy with the tax legislation coming in. Everybody's asking questions. Tell us, please, how important is tax and tax planning for family businesses or high net worth individuals?
Well, I think what we need to remember here, Isabella, is the fact that each country has their own tax rules. And normally they would tax an individual based on their tax residency. It's actually very few countries, including the US, that would tax you based on your nationality. And the countries that would tax you based on your residency would actually tax you based on their rules and not where you consider yourself resident or living. So considering families, high net worth individuals, and with children studying abroad, we do live in a very global world where you can easily travel around and spend longer time of period in one jurisdiction. What I think a lot of people do not think about is the fact that their lifestyle can actually create a tax liability if they do not think about how it impacts them or not are aware of how it can impact them. So with the tax coming in the UAE, I think this is also a good way for people to be more aware that there is something called tax and that you actually need to be aware of how your life might be impacted by the tax liability, and that you could technically be tax liable on a territorial basis or a worldwide basis in another jurisdiction where you do not consider yourself tax resident. So to answer your questions, it's very important to think about tax in this society.
But then, those tax considerations, I mean, how would they impact family businesses and how they plan their residency, where their assets are going to be? I have a client who calls me and says, but Isabella, I mean, I spent 2 months a year in the Bahamas, then I'm in Miami, then I come to Dubai. I've got assets everywhere. And, it starts getting really, I think, overwhelming, right? But I would imagine that this is when someone like yourself would come in and then try to organize it and assess what implications there might be.
Absolutely, absolutely. And a very good point with the fact of somebody moving around and spending so much time, because the risk that they're creating is not just for themselves and their own tax liability and what they can be taxed on an individual basis, but being perhaps, I assume, let's say he's a director or maybe the sole shareholder and director of the company, being abroad outside of the country where you've established your business, for example, and where you're managing and controlling the business outside of the country of where the business is operating or being established, you could even create a tax liability for your own business, because you can create a permanent establishment or even place of effective management, and that would even be an impact on the business and not just on you. So yes, it is very important to not just look at yourself and the impact you have on your personal taxation, but the fact of the assets that you hold, if it's a business, how will that impact being abroad and taking certain decisions and managing and controlling the business.
Yeah. That's interesting, that point that I think is becoming very, very clear, and I would like our listeners to keep that in mind, is that it seems to me the actual physical residency and tax residency are not always the same things, right? Somebody may say, I spend the majority of my time in Monaco, I should be okay. But actually, it still doesn't mean that there are no tax liabilities created elsewhere, right?
Exactly. Definitely, tax liabilities and even compliance obligations, which could lead to penalties and unnecessary exposure. So that's one of the perks and benefits with tax planning is for businesses is the fact that you would reduce your tax, have more of a cash flow within the business and you can reinvest, but you would also make sure that you're compliant within the jurisdiction that you're operating, that you are following every rule and anything that needs to be done. and you would mitigate the tax exposure.
Yeah. Could you give us some examples of solutions that can be worth looking into, and when you actually sit with a family business, that you would also be considering, right? An example of where the issue is and potentially how the situation can be improved to make sure that there is more of that tax efficiency, right?
Absolutely. I mean, number one is to actually look at your structure and map it down. What is my current ownership structure? How am I being, let's say a risk assessment of the structure. What is the tax implications as of today? And for family businesses, sometimes it's not just tax. I mean, looking at the tax or looking at the structure and tax being the main driver, you can still look at the succession, let's say the asset protection. So you can, map it all in under one kind of assessment. But definitely, first of all, you need to know what are the risks? And then secondly, how can we mitigate this? What are the best way of doing it? Is it to set up a holding company in a jurisdiction with good double tax treaty networks, or with a good tax system? Where am I situated? Would it make sense to actually have the headquarters where I am to mitigate the risk for permanent establishment and place of effective management?
Yeah.
So number one is to look at your structure and then see how you could restructure.
Yeah, that's actually interesting. And again, I think we're going back to the point of really tailor-made advice, right? That there isn't one size fits all. That you will then sit with a family business, assess their individual structure and situation, and based on that, then make recommendations, right?
Yes.
With corporate income tax, that is coming in, and it's just a matter of a couple of months now. For family business, do you think the UAE will continue to be attractive, or are you worried that it might be a strong deterrent for families, and they may no longer be interested to actually structure the family wealth through UAE solutions?
I don't think it would completely scare people away. I do think that will have a small impact on people when they're considering using UAE, because we're actually going from no business tax to a 9% tax to be applied on business income here in the UAE. So of course that would make people think once or twice, and I've had that already, those discussions with some of my clients, where they have highlighted the tax and does it make sense for us to have our structure here? Well, I think what's important to have in mind is that when you set up your structure, tax may be a very great big factor for where you put it, but it's many other factors and circumstances that are important that you should have in mind, that I think UAE is providing, and that it's still going to attract people to come to the UAE. I want to highlight a few things since we're talking about this concept. So we're talking about tax. First of all, we're talking about business tax. So it's not a personal income tax. Yes. We still don't have...
Good news, right?
Good news.
Touch wood.
And we don't have any indication if it's going to come anytime soon. Hopefully it's going to come in a very long future or not at all. So it's a business tax we're talking about. Secondly, it's a 9%. So if you compare UAE to other jurisdictions with the same reputation and same kind of location, or with comparison...
Attractiveness, right? On the geopolitical side, it could be still competitive, right?
Exactly, because if you compare UAE to other jurisdictions with the same reputation, 9% is still in the lower range. Yes. So it's not as high as many other jurisdictions that would be competing with UAE when it comes to setting up a business structure, a family business structure. There's also the possibility of benefiting from a 0% tax for free zone entities, for certain qualifying income. But I mean, it's not just a 9% flat rate. It's actually a possibility of a 0% as well. And for families that are thinking about setting up foundations or have a foundation, we've discussed this in one of our previous podcasts, is the fact that they can actually apply apply to be considered as a family foundation. And if they would be able to do that, they could be considered as unincorporated partnership, so they wouldn't be seen as a legal entity from a corporate tax perspective.
I see, and then potentially they would be able to benefit from zero tax or not be subject to corporate income tax legislation at all, right?
Yes, so if that were to go through, the foundation itself would not be seen as a vehicle to be taxed. It would be actually a look-through concept, so kind of like a transparent, and the shareholders would be then looked at. Depending on who the shareholder is, that's where there might be a taxation, or they might fall outside of the scope of the regulation and no taxation would apply. So there are still benefits from a tax perspective, and UAE itself is an international hub for businesses. It has a stable economy, it has easy access to international markets. So having all of this in mind, I do think that it will still attract the right family businesses to establish themselves here, and the 9% tax will not scare away them from that.
From being here. Well, this is actually very good news, right? Very good news for I think all of us, and for family businesses, that the ones that are here don't need to worry that they would need to look into other options. Now, on that note, Midya, just to wrap it up, with tax regime changes, with the fact that, of course, the world is moving very fast, what would be your advice to family businesses?
Well, I mean, we've kind of highlighted the tax and the tax implications. You living your life in this global world would have an impact on, could have a tax liability on yourself. And being spontaneous is not always, is something amazing, but doesn't really go hand in hand with tax, unfortunately. Yeah. So my number one advice would be to have a tax advisor or a tax lawyer that can guide you through your questions when it comes to your own personal liability, your company, how to structure it, any investments you do, would it be within the region, outside of the region. Just make sure to have your advisor on speed dial, and make sure to give the call before doing anything spontaneous.
Excellent. We've had Midya Omar as our guest today. Thank you very much, and we look forward to speaking to you soon on a related topic. Goodbye.